India is all set to get a brand new social stock exchange through the NSE. What does this mean for India's growth? That's what Vikram has tried to simplify and explain yesterday. Take a look at what he has to say.
Now, India is set to get a brand new social stock exchange, and this through the National Stock Exchange. What exactly does this mean for India's growth? And that's exactly what we are looking to explain today. The National Stock Exchange has received the approval from the Securities and Exchange Board of India, SEBI, to set up this social stock exchange. The exchange is going to function as a separate segment from the 22nd of December 2023. But what is the purpose of this new stock exchange? Well, non-profit organizations can now list on the National Stock Exchange and raise funds. It's in line with the Finance Minister Nirmala Sitharaman's vision to create an exchange for social enterprises and voluntary organizations to raise money for their causes. Now they can raise funds through equity, through debt, and through mutual funds. The not-for-profit organizations, they would issue these zero-coupon, zero-principal securities to raise funds, the ZP securities, like we know them. So what are the intricacies of raising funds through this exchange? At present, the prescribed minimum issue price is 1 crore rupees, and the minimum application subscription size is 2 lakh rupees. So according to the National Stock Exchange, trading is not permissible in the ZP kind of category when it comes to bonds, but it can be transferred for other purposes, such as the transfer to legal heirs. So another question is, who is eligible to raise funding through the social stock exchange? Well, this exchange identifies non-profit organizations and for-profit organizations as social enterprises. To be recognized as a social enterprise, organizations need to demonstrate that 67% of their activities have targeted underserved or less privileged population segments or even regions that have recorded lower performance in the development priorities of either central or state government. So this brings us to the other big question: who can invest in these instruments on the social stock exchange? So as per the NSE circular, institutional and non-institutional investors can invest in the securities issued by the social enterprises, while retail investors, they are allowed to invest only in securities issued by for-profit social enterprises. Foreign investors are currently not allowed to invest through the SSE. While this is still a new concept in India, many countries like the United Kingdom, like the United States, Brazil, Canada, they already have such investment platforms that have helped social organizations raise funds. And India too is hoping that such platforms can help bring in investments to social enterprises.